JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 19th of March 2021. So yeah, welcome everyone. Welcome to this Friday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is the German index Dax, and as you can see, the index is drifting lower, and it's managed to fall below this 14,670 territory, the one that I spoke about this morning. And now we're seeing this drift to the downside towards the next potential area of support, which recently, or should I say this week, was seen as a good area of resistance. Now it could take the role of support, and that level is around the 14,595 territory. We're not far from that area, and to be honest, I mean, looking at this picture, it seems that there is a very good chance we could actually end up reaching that one. So keep your eyes on this area, keep your eyes on this hurdle, and let's see how this is going to play out. If this gets broken, well, I mean, this could lead to even a larger correction to the downside, and of course we'll be watching the weekly candle to see if the weekly gains are not going to get wiped out here. So in order for that to happen, we would need to see the price falling all the way here towards that 14,496 territory, and then yes, of course, we would take it from there, guys. This would confirm a nice little shooting star here on the weekly candle, and on the weekly chart, and maybe this could lead to a bit of a larger correction to the downside going into next week. However, again, let's not rush into anything yet. For now, the first target is the 14,595 territory, and then we're going to take it from there. Now jumping into Nasdaq 100, so drifting a little bit to the upside, correcting a little bit to the upside here. However, yesterday the index, of course, sold off heavily, and I mean, this was a bit of a roller coaster ride here this week. So there were kind of a lot of contradicting scenarios here, to be honest, and now we can see that yes, it seems that it's currently liking this little range roughly between these two levels. So in the beginning of this week, I've kind of talked about this little idea that in order to go for some higher levels, we need to see a push above that 13,300 territory. But for the downside, I would prefer to see a drop below the 12,758 territory, roughly around here. And as you can see, that's the reason why. So far, I mean, this week we traveled higher. We almost came close to, well, we came close to the 13,300 level, but failed to break above it, and instead we drifted lower, came close to this 12,758 territory, but failed to drop below it. However, we still have the full US session to go through today, so let's see if this area will continue to provide support. If not, then, well, I mean, this could turn out to be a little bit ugly for the bulls, as we can see, and we'll have ourselves a bit of a negative candle here, the weekly candle. So the week will close in the red. But another thing to keep in mind, of course, if, for example, today this drops below that 12,758 territory, my next target is this 21-day EMA on the weekly chart, because as you can see, this 21-day EMA so far continues to provide decent support, although we keep getting these little overshoots here, for example, for the past couple of weeks. But overall, the 21-day EMA did provide decent support, so we'll keep an eye on that one. Now, jumping into another index, and this one's a dollar index, and yep, we can see a beautiful push here to the upside. However, again, as I mentioned before, let's wait for that daily candle to stay above this area, because what we don't want to get here is basically a false breakout, and of course then yes, we'll take it from there, because if we get another false breakout, then maybe the upside we're not really ready here to go higher. But if we do stay above this area, then of course my next target is the current highest point of March here, the 92.50 level, or this 200-day EMA, or this downside line taken from the high of the 25th of September. But if that gets broken, of course, yep, higher levels could be met. But at the moment, let's keep it short and simple. And for the downside, I need to see a drop below the 91.36 territory right here in order to get a little bit more excited with lower areas. Now, gold continues to respect this resistance area, and this 1740 territory. This is what I'm keeping an eye on, or continuing to keep an eye on, together with the downside line and the 21-day EMA. So far, everything's kind of still providing decent resistance. So let's say if we today see the daily candle today staying below all this area, then of course going into next week it increases the chances for a bit of a move lower. However, if we get a push above this downside line and above this 21-day EMA, then yep, maybe higher levels could be met. However, as I mentioned before, I would prefer to wait for the 1760 level break here before targeting higher levels. WTI oil, so still hanging slightly above this 59.27 territory. I spoke about this level this morning. This is the low of the previous lowest point of March. Although yesterday we overshot it, it's still, you can see that the daily candle remained above it. So yep, now we can see that we had a retracement. This morning I said to you guys we were basically hanging somewhere around here, and I said to you that we might get a bit of retracement here. Maybe not even reaching this 21-day EMA or this 62 territory. And as you can see, yep, now we're testing this area again, this 59.27 territory. So let's see if we can get another break below it. If we can, then of course, yes, my next target is the upside support line taken from the low of the 20th of April 2020. Bitcoin Cash, quick update on this one. Not much has changed, but still very interesting, because I'm monitoring this little idea here. In order to go for some higher levels, not only a push above the 553 level would be needed, but just to be a little bit more on the safe side, a push above the 600 zone could do the trick for more buyers. For the downside, I need to see a break of this upside line and a drop below the 502.50 level right here, which is marked by the current lowest point of this week. AUD/JPY, very quickly on that one. AUD/JPY drifting back down. So this 84.95 territory continued to provide resistance. So although we had a few overshoots here, as you can see, the daily candle failed to remain above that area, and now we're seeing this violation of this upside line. Let's see if the pair can drift further south and test the 84 mark. But if that gets cleared, now this is where I'll get a little bit more excited with the downside, and I'll start aiming for that 21-day EMA or even below that. For the upside, I need to see a push back above the 84.95 territory, and ideally a daily candle staying above it. GBP/JPY, very quickly on this one, breaking this upside line taken from the low of the 4th of February. And to be honest, Well, I mean, we already did have quite a decent up move here, so maybe a bit of a corrective move here lower could be possible. So again, let's see how this is going to play out. But for now, everything's leaning a little bit more towards the downside, but to strengthen that scenario, a drop below the current lowest point of this week near the 150.79 territory could do the trick for more sellers. As you can see, we're at this point at the moment while we speak, while I speak, basically we are getting closer to this area. So let's see if we can drop below this. If we can, this of course puts the pair into negative territory. Well, the pair is already in the negative territory, to be honest, but even more in the negative territory. But again, this key support zone could be broken, and yep, this could open the door towards a bit of a larger correction to the downside, because don't forget that we're still trading above some of these upside lines. But my initial target will be the 21-day EMA here. USD/CHF pushing nicely, well, for obvious reasons, of course, because yep, the equities are drifting south, and the US dollar together with the yen are seen as the US is seen as a safe haven, and now you can see that yes, the pair is pushing above this 0.9296 level. Let's see if it stays above this. This is what I talked about this week, in the beginning of this week, because the idea was that if it drifts lower, but let's say finds support somewhere near this upside line, yes, it could rebound, but my preferred scenario would still come on a break of the 0.9296 level. And if we get the daily candle staying above it, my next target is the current highest point of March near the 0.9375 level. EURUSD, so dropping below this 1.1880 zone, and I spoke about this level this week and this morning as well. So now the big question here is, can we make our way to the towards the 200-day EMA here, shown as the black line, together with this 1.1834 level? And if we if the rate continues to trade below the 1.1880, then yes, of course, the pair has a very good chance of testing this area. But if that gets cleared, well, this will confirm a forthcoming lower low, and further declines could be possible. Initially aiming, of course, for the 1.18 zone, but then we'll, of course, take it from there. For now, guys, long story short, I'm not saying that this is going to just turn south now, but it has a very decent chance of doing that, especially if the pair continues to trade below the 1.1880 zone. So keep that in mind. For me to get comfortable with the upside, I need to see a push above the 1.1990 level, somewhere around here, and a push above all of these EMAs here, the 21-day and the 100-day EMA, and then yes, we could go for a bit of a larger correction to the upside. But that's of course, it seems like that the upside scenario is slightly off the table. So guys, that's it for this session. So I hope you found it useful, and thank you very much for watching and listening. I really appreciate your time. If you want to catch my video on Monday, as always, my Traders Espresso, 7 o'clock GMT time. For now, guys, have a wonderful weekend. Have a nice evening today as well. And yeah, I'll see you on Monday. Thank you very much, and bye-bye.